So the rand steadied in early trade as investors prepare for a sharp U.S. interest rate rise this week. Amid signs of a weakening global economy, the local currency is holding steady after breaking below the 17 rand mark last week. Petri Redelinghuys is trader and founder of Herenya Capital Advisors, with us now to talk about the latest market moves. Petri, welcome back to Daytime Update. There seems to be this bouncing back against the major currencies. What sentiment do you think is driving these moves, and will that data from the US out this week damper any of this?
Good afternoon, and thank you for having me. I think it's a bit of a difficult time, really. We're in a very unsure time in the market. If you look at sort of market sentiment or investor sentiment, it's almost the poorest it's been in a very, very long time. I mean, as long as we've been measuring investor sentiment, it's essentially at the very, very lows. But interestingly enough, investors aren't really following through with selling a lot of stock. So yes, the market is down some 20% from the highs. However, we haven't seen investment flows much on the sell side. So it's as if the market is very much taking a wait-and-see approach with many of the, most of the market participants are almost sort of trying to buy the dip rather than selling out of their investments. So I think absolutely yes. On Wednesday, what the Fed does will potentially have an impact on the market and might swing that sentiment, that already negative sentiment, into selling pressure. What we have been seeing, though, with regards to the rand, is that the dollar has been immensely strong. So while there's all this uncertainty, investors have been flocking to the U.S. In order to find, relative safety compared to investment options elsewhere. And this has driven the dollar index up quite a bit. In fact, the last time the dollar index was trading at above 103, for reference, it's currently trading well above 103. It's currently trading at 106.5. The last time it was trading in this zone was during the global financial crisis back in 2008, 2009. So that shows a certainty, or that shows a certain amount of sort of flight to safety that international investors are doing. And this, unfortunately, has had a negative impact on the rand as well. Obviously, we shoot a few, high-quality own goals from time to time, which doesn't make it much easier for us. However, over the last week or so, we've seen a little bit of confidence come back into markets. We've seen the U.S. markets bounce a little bit. We've seen international markets recovering somewhat. Whether or not this is just a bear market rally or not, I guess time will tell, and I suppose Wednesday will be a telling moment in that story. However, as the confidence has sort of come back into equities and we've seen the market bounce, we've also seen money flow back into emerging markets a little bit, which is what is strengthening the rand. In our weekly note we put out on Sundays, we actually mentioned last week already, and we reiterated this week, that 1650 is kind of our target range for the rand. However, this is a short-term target. The longer-term trend is still very much intact. And unless we sort of really see a strong fundamental catalyst, in the form of the ability to dodge a recession or somehow formulate some sort of a soft landing, that we don't have, a global recession. And interestingly enough, the White House just over the weekend changed the definition of a technical recession. Who knows what to expect from the Fed on Wednesday, right? But unless we see some sort of really positive global catalyst, we are probably in for a trending stronger dollar. So in the short run, yes, the rand might firm up against the dollar, but over the next 6 to 12 months, unless we have a big shift, some sort of very large fundamental event, like an end to the war in Ukraine, for example, or really starting to see inflation numbers coming down, or really some way of avoiding a stagflation type scenario, we probably see the rand continue to slide over the medium term.
And gold has steadied as the treasury yields and the dollar declines. Oil is still sliding. Explain that to us.
So I'm not really too sure how to explain oil, to be honest with you. I've been an oil bull for some time, and I still am. I think what's interesting now is that if you look at front-month oil, or oil for nearest delivery, if you look at oil futures contracts, so contracts trade on different time frames. You can trade in oil that's for delivery at the end of the month, or in delivery in 3 months, or 6 months, or 9 months, or 12 months, or whatever the case is, right? And you can pay for it now, essentially, using a futures contract, right? So if you look at long-dated contracts, the oil price is considerably higher than what it is in short-dated contracts. So there's some sort of an imbalance. It shows that there's still a constrained market and a supply constraint. And if you look at sort of physical deliveries, Sapre last week said, claiming force majeure because we're just not getting oil deliveries, yet the oil price is coming down. So there's some sort of a disconnect in the oil market, and I think that what's been driving that down for the most part has been these recessionary fears that we've been hearing about and talking about, and is sort of circulating through financial markets that we're going to potentially have this global recession, and what's that going to do for oil demand, and that's very negative. However, it doesn't change the structural picture in the market, where there is physically a supply shortage of energy, right? And we can see this with energy prices in Europe, particularly Germany. Obviously, their situation is a bit more complex. But interestingly enough, the Middle East is sort of seeming to side not with the U.S., but rather with China and potentially even Russia. They are not really, being very aggressive on production output increases and that kind of thing. In fact, there were some comments that they made that they want to move to balance the oil market, to reflect a fair price for the amount of supply that is in the market. So, my bet is on production cuts in the coming weeks from OPEC, for example. So I think the oil price, yes, has come down quite a bit in the short term. However, again, looking at the medium term, unless we have any sort of fundamental shift in the current state of the world, that's quite drastic, I think we probably are in for higher prices later on. Mm-hmm. And just to touch on gold as well, it has stabilized quite a bit. Although, keep in mind, it is down quite a bit from where it was at the peak of the COVID panic. I mean, we were trading almost $2,100 an ounce at that point. We're now at $1,730. So I think, depending on what the inflation story does again on Wednesday, might be a catalyst to get gold slightly higher.
Let's end with Anglo American Platinum. It's published its interim results. Anything to write home about?
Yeah, it was a bit disappointing, I'll be honest with you. Although I suppose not that far outside of what the market was anticipating. I mean, they did have a reduction in sort of production by about 4%, although sales volumes were down somewhat more, so headline earnings per share was quite negatively affected. I think a lot of that has to do with some, logistics constraints that they were dealing with, and also their rising input costs, where their margins are being squeezed. They're obviously a big oil consumer in terms of energy use. So they've had a tough time, and it's interesting to see that they're actually, I would have expected them to do a bit better, but, they cite a number of reasons. One, inflation, providing some challenges in terms of production costs, as well as supply chain and logistic challenges, and, PGM prices having come off somewhat over the last 6 or so months. So, it's a bit disappointing. However, the forward guidance is always positive, as most companies would be, right? Where they say the market is currently in a bit of a oversupply situation with some of these PGMs, and over the next sort of 2 years, they expect things particularly like rhodium and so on to go into a sort of undersupply situation again. So it's a bit disappointing, but the share price not really reacting too much. It's still trading at about 1,200 Rand a share, so it's down about 0.6%. But keeping in mind that about a year ago, the share price was double. We were trading above 2,400. So we've already come off 50% from the high. So I think that a lot of this sort of negative result was already baked into the pie, if you could say that.
Petri Redelinghuys, thank you very much for speaking to us today.